G'day traders, mindset reset. Just finished an absolutely cracker workout on Free Cash Wednesday. So today was an absolutely explosive day on almost every instrument. Today we're talking about other time frame traders. Excellent question from Mark. Sometimes I get confused about other time frame traders. Can we talk about that? And we have a new month, new timing cycle. Every instrument's going to have a different template based on where the highs and lows of the months we're heading into July. So for example, on gold, if you consider that other time frames have entered into the market at the breaks of highs or lows of the month and the beginnings of weeks. So often we will see markets that are going to continue trending, make higher highs, breakout pullbacks, continuations, or lower lows. Same concept, breakout pullback, continuations. I mentioned in the community post, I'm going to go over that. I'm going to try to put together a short and condensed playlist to be big picture. You know, some traders are really struggling, and again, listen to this real closely. Get rid of the mindset of trying to sell highs and buy lows when they break out. That is not a trading setup, and that's why you get steamrolled, especially on a day three, if you counter trend a market that is going to go parabolic or has already broken out and is going parabolic. So, repeating that on a Wednesday, Friday, Monday, Tuesday, Wednesday, day one, day two, day three, regardless of everything else, I still look at that as a 3-day parabolic opportunity if a market is set up properly. And so there are only two types of trades. So get rid of the idea that things are guesswork and it's bullshit and everything else, and start to understand that you can only go in one or two directions. You can either buy or sell. That's it. The rest is all in your head. It's all fluff and duff. And you had either higher highs and a dump and pump setup, explosive breakout at first bounce opportunity. If other time frames are driving those markets, for example, if there's a 4-hour market getting ready to go into a range expansion, you're going to get a first bounce maybe on a 15-minute or even a 1-hour chart, let alone a 5-minute, and again the beginning of a new hour. So gold broke out, trap traders counter trending a day three market that was coiled to go on a range expansion, opening range breakout. That pullback stayed on top of the daily high. So we've already broken outside of Monday's opening range. Breakout, pullback, continuation, second hour to complete a range expansion. That market is still going. So parabolic reversals or trend trades. And if you're just counter trending because it's broken out, that is something that you need to sort out for yourself. And I want you to think about something. If you're counter trending a market that other time frames are driving, think about what you're doing. You're stepping in front of a freight train, a 4-hour trend, a 1-hour trend, and the market breaks out and you counter into that. It's going to run right over you. Think about what that. Have a think about that. Okay, it's if you're at the high of a month or the low of a month for a parabolic reversal, and you get that time frame. If you get that set up on a smaller time frame, that is completely different, because now you potentially have other time frame traders trapped on the breakouts. So they've traded a breakout potentially low of day, low of week, low of month maybe, daily, 4-hour, hourly. So we're always trying to align ourselves with the bigger picture. And if there is a counter trend opportunity, it will go parabolic. It will go parabolic. So stepping back is important. As I mentioned, we talked about this a few months ago. If you're just trading Wednesdays and Fridays only, and really stepping back and allowing templates to unfold. Asian crosses. Wednesday morning, parabolic moves right off the bat in Asia. Easy money, laying on the floor, no major red news to be worried about. 50 pip vertical moves. Day one, day two, day three, reversals. Euro Oz, pound yen. I mean, there was money laying on the floor in the Asian sessions, as I talked about. So if you're struggling, and there are others who aren't there, you know, and again, if something doesn't look right, I don't try to force my will onto a market, but gold delivers. It delivers almost repeatedly, and it typically will look to disappoint the majority of traders. So, you know, stepping back and understanding any instrument that you're trading, where the highs and lows of the weeks are, let alone the days, And you may be trading on an inside. So I talked about this US Swiss franc last week. Monday set the high and low for the week. Tuesday, Wednesday, Thursday, 3 higher closes. First red day, Monday, Tuesday, Wednesday, 3 higher closes. Thursday, first red day. Friday, a vertical blow off that continued after payrolls. So simple stuff, but step back, look for the easy setups. Don't try to you got to break these habits, and I can't do that for you. If you think it's just a matter of it's up high, I'm selling it, and day counts don't matter and everything else, and then you get frustrated and you over leverage and you try to double up and get back to break even, that is not trading. That is going on tilt, and you're going to end up doing damage. So the number one thing to do is if you're not consistent, is stop. Number two, if you're trading the news and you don't have any results, stop trading it. If you're trading the news, use a longer time frame, 5 minute, 15 minute, and understand that if a new hour is beginning, okay, there's either going to be a reversal opportunity that's going to be clear as bell. There's like, you cannot get it wrong if you actually know what they look like. Otherwise, you're just trying to sell something up high or buy something down low. And then the second or the third component of that is, if you are in a winning trade, make sure you get paid. So some traders were in the S&P this morning. 1 hour, 2 hour, 3 hours. 4th hour, vertical 100 pips straight down into the second hour longs. So if they didn't lock in the money, they're out. They're out of the money. Or they're holding on in hope mode, and that's not a great strategy. So, but understand the other time frames. And the problem with some of the traders, you have to realize that week 1, week 2, week 3, we can go into a trading range. And so people are trying to find a trend, which is why it's important that you understand the type of template that you're in. Otherwise, you're going to be trying to trend trade all the time, and you'll get caught up high on a reversal day or caught down low on a reversal day. But we're week 2, coming into the new month. We've had range expansions, opening range breakouts, and then breakouts on the news that continued for measured moves. You think I'm kidding about classical charting principles? Everybody is blowing over these little concepts, but those are the most important things, because that's where you get your range expansions for profit targets, not only on the smaller time frames, but when other time frame traders are driving those moves. So hopefully that makes sense. Understand opening range, initial balance. It gives you everything you need to know. Day 1, day 2, day 3, session 1, session 2, session 3, hour 1, hour 2, hour 3. So other time frame traders, study that, understand what it means. Keep it simple. We're going to have Free Cash Friday, and I know some people don't like that. I'm going to keep repeating it, because you have to hammer it home into your head. Don't trade the junk unless you have an actual parabolic opportunity on day 2s. Understand that. And that can be a day 2 trend trade, just like an hour 2 trend trade. Breakout, pullback, continuation. Or a parabolic breakout that sets the higher and low now for the week on day 2. Wednesday is day 3. And guess what it is at 5 o'clock today, New York time? It becomes day 1 in a Wednesday, Thursday, Friday, 3-day template. I'm going to get a lot of emails about that today, probably too. Have a great day, traders. Keep it simple. Step back. Look for the easy cash laying on the floor. Otherwise, don't trade unless you have an edge. Do not trade unless you have edge. Quit guessing. And to the traders who are nailing these trades, I know a couple traders have doubled their account this week already alone. Keep it going. There's no limits. Have a great day, traders, and may the markets go with you.